Good evening, everyone. Myself, CA Parvinder Singh, Secretary, Kurukshetra branch. First of all, I would like to thank Nanda sir, Chairman, Internal Audit Standard Board, for giving me this opportunity. Welcome you all in the today virtual CPE meeting on Global Trends in Internal Audit, a look ahead, hosted by Kurukshetra branch of NIRC of ICI and organized by Internal Audit Standard Board of ICI. We have with us CA Gaurav Gupta ji, Chairman Kurukshetra branch, who will share opening remarks. Over to you, Gaurav ji.
Thank you, Parvinder ji. Good evening, everyone. Respected CA Charanjot Singh Nanda ji, Central Council member and Chairman of Internal Standard Board of ICI, CA Gyanchand Mishra ji, Central Council member and Vice Chairman of Internal Standard Board of ICI, CA Abhijit ji, CA Deepika ji, CA Premnath D ji, our guest speakers for today's webinar. Dear participants, ladies and gentlemen, on behalf of Kurukshetra branch of NIRC of ICI, CA Gaurav Kumar Gupta welcomes you all in the virtual CP meeting on the global trends in the internal audit. I think today is the time of internal audit only, rather than the statutory audit. The internal audit is gaining the much importance after the recent developments in the disciplinary system of the institute. So also, I'm also thankful to CA Charanjot Singh Nanda ji for giving our branch this opportunity of hosting this webinar. I hope that today's program will be beneficial to all. Now I request CA Parvinder ji to proceed further. Thank you.
Please unmute. Parvinder ji, please unmute.
Thanks, Gaurav ji. Now we have with us CA Charanjot Singh Nanda ji for welcome address and keynote session. I would like to introduce Nanda sir. Nanda sir is currently Chairman of Internal Audit Standard Board of ICI and Central Council member for 25th Council of ICI. And he was member of Quality Review Board set up by Government of India, was member in Central Council of ICI for 2004 to 16. And there is a long list of Nanda sir achievements. By not taking so much time, over to you, Nanda sir, for welcome address and keynote session.
Thank you, Mr. Parvinder. A very good evening, ladies and gentlemen. We are back with yet another exciting session of internal audit. Let me very candidly tell you all that the board is totally inclined to ensure that we give best quality technical information to our members. Honing of technical skills is one of the most important facets on which your board is always focused. You are well aware that the board was set up in 2004. I am the founder chairman of this board. I joined the council in 2004 and the then president, Mr. Sunil Goyal, entrusted this responsibility to me. And today the board has grown manifold with so many things which it does. I welcome the chairman of Kurukshetra branch, who is the host of this program, CA Gaurav Gupta, the secretary, CA Parvinder Singh. I have three of the relevant speakers, Madam Deepika S., Mr. Premnath Degla, and one of very enterprising, my younger brother, CA Abhijit. I can also see the board, I can also see the secretary, Aarti Mansal, and my salutations to all of you. Ladies and gentlemen, today's topics have been very carefully picked and put across to you. Give me a second, I'll put on my screen so that I'm able to share the keynote presentation to you. Give me a second only, please. Parvinder, is my screen visible?
Yes, sir. Yes.
Yes, sir.
Great.
It is visible, sir.
So I start my keynote address. So today's virtual CP meeting is largely on the title Global Trends and Internal Audit, a look ahead. We have now to converge with the global practices because India has done a number of things. I happen to be the chairman of Digital Assurance and Digital Accounting and Assurance Board. And let me tell you very candidly that your institute, the Institute of Chartered Accountants of India, under the aegis of DAV, was the first institute to come out with forensic accounting standards. Your institute, which is an integral part of IFEC, is the first institute in this world having close to 400 constituent bodies which had come with guidance on remote audit way back on 30th March 2020 when the COVID had barely started. So today's sessions would be based on how you can look ahead in global perspective. The coverage, the coverage includes adding value in the emerging uncertain risk landscape. The second topic is integrated assurance. And third topic is system controls and the role of internal audit. The first session, which is on adding value in the emerging uncertain risk landscape. Now, why the risk landscape is uncertain? Because you need to understand that risk can come from anywhere. You cannot stop the risk. You see, there is always the risk of frauds due to change in process and working arrangement. A company, an enterprise is always ready for risk mitigations, but you never know from where risk comes. So risk can always sweep in. So risk of fraud due to change in process and working arrangement is very important. You have to restructure the company's risk management framework to fit in that anything which comes, you are able to take it on the right stride. You have to safeguard your workforce and find new ways of working so that you are able to effectively service. And as a chartered accountant, you need to always hone your technical skills so that you are able to effectively serve the board or audit committee as the case may be. You have to improve the financial strength of the company. Very important. You have to evaluate the business strategies with the goals which have been set up by the board. Internal audit essentially is a management function. And therefore, you need to understand how supply value chain via collaborations with vendors can be stabilized so that there is no much goods in process. They are needed, they are immediately provided. You would always move towards technological advancement and digitization so that you are able to reap the rich benefits of this technological outburst. Enhance customer value proposition. Yes, this is when you increase your shareholders' value, your stakeholders' value, and at the same time, you are able to effectively help the new customers who join the bandwagon to have benefit from you. Now, what is internal audit and risk? Please understand that the primary focus of internal audit should be on risk, both as opportunity and threat. A gentleman called me and said, Mr. Nanda, I want to start a business where there is no risk. I said, thanks, sir. I'm a chartered accountant of 31 years experience. I have also been, from the days of my inception, trying to find out in venture where there is no risk. And unfortunately, I could not find. And then I concluded by saying that if there is no risk, there is no opportunity. So when you focus on risk, you have to look both at threats and opportunities. And you have to spend more time in preventing risk identification than the detection of control problems. Second thing, the risk management process has to be mature. Internal audit can serve more in assurance capacity. Organization where risk management implementation is in the initial stages, the role of internal audit is very paramount, often as a catalyst or facilitator to help foster development of the organization's risk. Further, the more risk mature the organization is, the more internal audit can give the board a realistic picture of how well risks to do their strategic objectives are being managed. The board also needs what is the level of exposure they take, coupled with the risk initiatives which have been taken. The second session is on integrated assurance. Integrated assurance is a new topic, but still there are certain 5 principles which I would like to share with you. The first is that internal integrated assurance provides an objective view and conclusion that cannot be influenced. That is something which is synchronous and you are able to effectively dwell upon that. Second, internal assurance gives due authority with strategic sponsorship and commitment, governance and reporting systems, trust, transparency and viability, which are the byproducts. Once you move, you transverse in those greener pastures, you are able to effectively come back with effective results. Now, what happens when you use integrated assurance? Proper strategy and planning proportionately reduces duplication of effort. The effort is used in the right direction and results are also mostly error-free. And they are tailored to maximum effective use of resources. The resources are never idle. They work smartly to add value to the company's perspective. Integrating assurance ensures that the findings are shared and provide a single view of assurance measure effectiveness so that the board or audit committee can have a very wholesome view of the entire system. Single view agreed between the project assurance providers and stakeholders. There is no ambiguity. The entire direction, the entire process is well crystallized so that they can move ahead in the same direction. The third topic is system controls. And when it comes to system controls, the role of internal audit has to be emphasized. Now, you need to understand that normally automated controls are often overlooked because IT departments are resource constrained and they may not have necessary risk management or compliance perspective or skills, and therefore they feel that automated controls are something which can be left behind, which can be ignored. Now, you have to understand that that today, virtually every company relies on computerized systems because they automate the day-to-day business transaction, collect auditable history, and provide operational and management reporting. And therefore, the automated controls give them an impetus where they can rely on whatever information they are drawing and whatever inferences they are creating. Automated system controls are key part of a strong internal control environment. When system controls are automated, it means that process is totally in the right direction, and in case of any loopholes, they are plugged immediately through a technological system. Automated system controls increase the efficiency of operations, improve accuracy, and help eliminate fraud. All areas are well guarded, and therefore, through technology, you don't go for test basis, but the entire data is being churned for desirable results. Now, a major advantage of robust automated control is that they are more reliable than manual controls because they work around the clock and they are able to effectively detect any leakages which are possible in the control system. And lastly, they work automatically and are not subject to human error or failure, which is very, very important. Why technology has set in? It is simply because they work on their own and they are not very keen to ensure that the working moves in the right direction. So, ladies and gentlemen, I would like to tell you that automatic controls would ultimately usher an area wherein all control weaknesses can be checked only through systems or workings which are totally automated in nature. Ladies and gentlemen, I will not speak much. I have so many things to share with you, but we have three of the devoted speakers who are keenly waiting for their turn to come and speak to you and address you. So over to the moderator and secretary of Kurukshetra branch, CA Parvinder Singh, for further proceedings. Mr. Parvinder, the dice is all yours now. Thank you.
Thank you, Nanda sir. Now, by not taking so much time, I would like to introduce our first session speaker, CA Abhijit Sanjgiri ji. CA Abhijit ji has worn multiple hats over the last 3 decades as an entrepreneur, practicing CA, senior corporate employee, author, trustee, director, mentor, examiner, interviewer, keynote speaker, visiting faculty. Being a speaker at ICA forums over 2 decades, spoken at CAG, global forums, IIM and corporates, being a contributor to ICI publications, faculty on post-qualification certificate courses, and member of ICI committees. A blogger having a hobby of coin collection and animal activist by passion. Thank you. Over to you, Abhijit sir.
Thank you, Internal Audit Standards Board, for giving me an opportunity to share my views. At the outset, I would like to slightly change the topic on global best practices. Not change exactly, but what I'm saying is the global best practices should come from India. We should be the trendsetter, we should be the leader, and the world should follow our practices. So it's the practices we follow should be such that they should be a role model for the entire globe to follow, and then they become global best practices. They are Indian best practices which the world follows. So we saw that in the pandemic, which was another risk, the way we could manage to vaccinate our entire population in such a short time. This was a case study in itself. So the way we de-risked the risk I think that's what is something at the operational level, at the way they identified it, they organized the resources and got that done in such a short time, I think is exemplary. So let's go to the topic right away. It's value addition in an uncertain risk landscape. And whenever I take up a topic, I just bifurcate it into its various subparts. So as we have in any audit, when we do a process analysis, we go through the activity, we go through the sub-activity. Similarly, we look at what do we mean by value? What do we mean by addition? What do we mean by uncertainty? And what do we mean by risk, which is the topic on hand. So what is value? Now, value can mean different things to different people. Value can be perfection. Value can be excellence. Value can be quality. Value can be efficiency. Value can be effectiveness. It could be maybe a zero error, a Six Sigma situation. It could be a right thing done right first time. It could be a continuous learning, constant upgradation, upskilling, reskilling. It could be productivity. It could be problem solving. It could also have some terms like we have an economic value add. We have a value at risk. We have a value for money. We have your unique value proposition. So we could have various connotations of risk, going the extra mile, our stakeholder delight, far exceeding expectations in case of a corporate employee review. We could have something where we overpromise and we overdeliver, sticking to our commitments, being on time. It could mean cost savings. It could mean fully compliant. And it could be improvement and being better and better at what you are doing practically every moment. So maybe some terms of value, we know what value are. Again, members could be free to add what is their extra connotations of value in the chat. We can take that up. We could get some useful brainstorming here and additions. And that's where I come to additions. 1 + 1 is definitely not 2. The sum is much higher. So addition is something where we are a plus, we are positive, we are better off than what we were yesterday. There are incremental improvements and we keep on moving from good, better to best, a movement towards perfection or excellence. So we are a better version of what we were, and the principle of compounding takes us to a much higher level. So this is value, this is addition, and then uncertainty. Now, what is uncertainty? We are not sure. Maybe it's probability. It's maybe a deviation, a variation. It's an unknown. So uncertain is also a fear that something may happen, not exactly planned. Because, as Nandaji said, risk is what can go wrong. Risk is something which can happen anytime, every time, and at all times. So risk is the most understood and misunderstood word. So risk stands for various things. It's at the very basic, a function of probability and impact. Probability is the likelihood. Impact is the significance. So you will have risk as what I call a TVG, a threat, vulnerability, or a gap. Risk is what can go wrong, as I said, sometimes, every time, and at all times. And risk has a connotation of a risk appetite, which is at the gross or the inherent risk level. And you have a residual risk, which is risk minus the controls where there is a design and an operating effectiveness. And controls work best when they are proactive, they are automated, they are corrective, they are collaborative, and they are deterrent. Risk has to be identified, especially the emerging risks. And that's where you have the concepts of a risk register, risk universe, risk library. So once you have identified the risk, then it's evaluation where you benchmark it to a standard. Maybe you ensure you have an SOP, a structured formal way of doing things so that you are right first time. Then an analytics, then your monitoring, your review, your supervision, your communication, all your mitigation processes. It's basically what we call an acronym called TARA: transfer, avoid, reduce, or accept the risk. So transfer in case you can't do it yourself, get it done from someone else. So you have third parties basically giving you an internal audit. So it's both your assurance that things are going right, or it's a consulting where you suggest or recommend best practices, and you have avoidance. If you can't do it, it's beyond your risk appetite, just don't do it. So that's where if you can't do something, please don't do it and make it worse off or make it wrong that you become liable. You tarnish your reputation also or your credibility. And in this era, your credibility and trust is everything. Then you have reduce. So obviously all the measures you take to reduce risk, these are the risk mitigation or containment techniques. And if you can't do all these three, then accept. So you budget for the risk. So something will go wrong. Yes, okay, up to this is my tolerance level. So I accept it. So this in short, in quick time, is the risk landscape. Now, how does internal audit come in to add value? Value, as we said, is a subjective term. It is contextual. It would vary from person to person. It would vary from organization to organization. It would again vary at what stage you are in your risk maturity curve. And members would be well advised to go through our audit quality maturity model and the digital competency maturity model. So in both of these, what are your levels of maturity? And maybe you could have even the organization's risk maturity curve drawn up. So you may have stages as an organization, maybe risk naive, maybe they may just not know anything about how to manage risks. From risk naive, they may move to a stage which is risk aware, where they are aware that there are risks and they are taking some baby steps to manage risks. To be risk defined, where they have concrete steps to manage and mitigate risks. And finally, to a stage where we are risk intelligent, where we are managing risks proactively and as a source of competitive advantage. And the biggest game changer is in accepting risks, knowing that risks are there, and then using it to your competitive advantage. This is a life which we call a VUCA world. VUCA stands for volatility, uncertainty, complexity, and ambiguity. Now, VUCA is a paradox. To fight VUCA, we need another VUCAs. So we need to be versatile. We need to be having a good understanding about everything, what we know, knowledge of business, as we say in internal audit. We need to have clarity on what we are doing, why we are doing, and how we are doing. And we need to accept the ground reality. You cannot move upwards in any situation unless you know where you are and where you want to go, so that you are very clear on the path you should take and how fast you should go. And VUCA also stands for having a vision. VUCA stands for being unique, having a niche, being an expert in your area of expertise and experience. And the old adage of jack of all trades is completely gone, I believe. It's jack of some, king of a few, and an emperor of maybe 2 or 3. So that's what is your unique, your niche, which you would all focus about. And finally, the A is the adaptability. You need to adapt to any situation. So we have the VUCA world, a coin termed long back, which we have another VUCAs to counter it. And this VUCA has been not superseded, but there is another new term which is used to describe the world currently, which is called the Bani world. And the Bani stands for brittle, anxious, non-linear, and incomprehensible. So how do you treat this Bani world? That's the acronyms which I have made. A world which is deaf, which is disrupted, which is endemic, which is artificial, and which is fragmented. And you have a world of pain, which is poor, which is attacked, which is inflated, and which is nervous. So you have a world which is in pain and which is deaf. And as I said, you need to counter it by being both fast and slow at the same time. You need to maintain the right balance. So fast is you got to be flexible, adaptable, speedy, and timely. And balance it with slow, where you got to be strategic, lean, organized, and wise. And that's where internal auditors come into being. They need not be operational. They need to be strategic. They need to be adaptable, flexible to basically counter any situation. They need to be wise, where they need to transfer their hindsights into insights and then into foresights. It's practical application of the knowledge they know, from data to information to knowledge to wisdom. It's from transformation to transcendence, where you make a complete change in a culture, when you make a complete change in a mindset. And that's where internal auditors need to position themselves. It's all about adding value. What is the pain point? Am I giving a multivitamin or am I giving a painkiller? The point is that we can't just keep on giving multivitamins. We need to also administer painkillers, because the situation is it needs to be corrected immediately. And then again is risk. What is the risk classification? The point in audits is that we have still a transactional mindset. Why are things going wrong? What is the root cause? What we are treating is the effect, but the cause is something else. So internal auditors swear by a classical cow fell in the ditch theory. If a cow falls in the ditch, you get her out. Then find out why she fell in the ditch and do all things to ensure that she comes out of the ditch again. So prevention is better than cure. It's an old adage, a proverb we learned in school. So if there is a transactional error, obviously correct it. But why did that happen? What is the real reason? And knowing the reason, treat it from the base, उसके जड़ से उसको treat करो कि दोबारा वो issue फिर से ना आए. So it's going deep. It's peeling the layers of the onion, asking the why. So if I know the why, I can do anything anyhow. So that's what internal audit has to be. It has to be strategic. It has to be positional. It needs to do the real risk profiling. It needs to know the real pain points. And this is a world of the 4 C's. It's a world of collaboration, where you can't operate in a silo. You have to be a team player. That's one of the biggest skills which an internal auditor needs. So you collaborate with other functions, with other teams, and you don't compete against them. You collaborate against them. And that's with another C, which is there is communication. And communication is the key skill which is needed. Communication, rapport, trust, integrity, gentle persuasion to get things done. And you can do things and achieve results and maybe be even more strategic if you are sound in communication. And then one more thing which is needed is you need to be creative. And creativity is all about innovation. It's all about using the right technology. And this has to be done with another C, which is critical thinking. And that is absolutely important because you all are a function of your thoughts. It's all in the mindset. Why does a person do a thing? It's all a study of NLP, a study of behavior. It's all about behavioral science. It's all about predictive analytics. Why does a person function the way he does? In case of a fraud, why does a person go to commit a fraud? Why is there a greed? There is a very thin dividing line between ambition and greed. So the 3 C's: pressure, opportunity, rationalization, and add another C, the capability. So for a fraud triangle, you can make it a fraud square. And why are these things present? And what should be done to ensure that the root cause, the pressure, unrealistic target setting, opportunity, weak controls, rationalization, the mindset. Are we attacking the real issue? Or are we just doing what we want to do? We need to first know what the stakeholders want. What are the stakeholders' expectations? You need to set expectations. It's not about audit planning. It's all about planning being in sync with the stakeholders' expectations. So for an audit plan at the start, who are the key stakeholders? So one is the management, those charged with governance. So you'll have the key management personnel as a part. So the CEO, CFO, maybe the company secretary, maybe the chief audit executive, the chief risk officer, the chief compliance officer. So they would be one part. Then there'll be your independent directors, the chairman of the audit committee. He would be another stakeholder. Then there would be another stakeholders, the various employees, the various regulators who would be looking forward to the internal audit reports so that they give the right assurance. So are you giving an absolute assurance, a reasonable assurance, or a limited assurance? You've got to be very specific. And a simple, and this is not just a best practice, this is a common sense issue which I've seen clearly lacking in a lot of audit reports. And it's not about the way you do an audit, it's on the way you report it. And again, the 3 C's of a good audit communication, which is also a C, is you need to be crisp, concise, and comprehensive. A reader of the report need not ask questions on this. And you should be to the point, you should be factual. You should state what you did, how you did, and to what extent you did, because you are not doing a 100% transactional audit at times. Yes, with artificial intelligence, with machine learning, with deep and design thinking, with your cloud computing, you could do a continuous control monitoring on a 101% basis, 25/8, 367 days. But still, when you're doing a process audit, what exactly you did, what you checked, who was the risk owner, what were the MIS reports you checked, and are things driven from the system? That's the key. And things need not be necessarily driven from the system, which you learned in the case of a banking fraud which happened in Maharashtra, to the PMC bank, which is out in the papers. There they replicated an entire system. So which system are you looking at? It's really when there is a fraud or something, you need to be watchful, you need to be mindful of what's happening. And not just the static risk, the emerging risks out of nowhere. The pandemic came out of nowhere, absolutely nowhere. And when the pandemic was ending, out of nowhere, you have the USSR Ukraine crisis. Again, throwing oil prices out of gear, causing a lot of supply chain disruptions. Again, there were issues where there were semiconductor shortages earlier. Inflation was already there, but inflation is suddenly hitting quite high roofs. And then you have something we have and we are a globally interconnected economy. So what happens in the US affects us here. So if your Fed is very aggressive in raising rates in US, your Dow will have a sneeze and they'll fall by maybe close to 1,000 points like what it did yesterday on Friday. And your SGX already shows a gap down and you'll already show a hit there because the markets are interconnected. Maybe not to that extent, but definitely yes to all shape things. So are we thinking then globally of the interconnections between various risks, as locally you have risk connections between various departments? So you have a USSR Ukraine crisis, you have the pandemic just beyond us, hopefully, inflation, you have changes in the government suddenly happening, as we can see in the neighboring country. We have debt crisis, some country, again a neighboring country going bankrupt. Then you have governance issues, frauds in corporates, major frauds happening, especially in the banking sector, not averse to it. You have climate change. Suddenly out of nowhere, you'll have rain in May. You'll have loss of crops. Cyber security issues, nothing new. Our inequalities in distribution of income and wealth. Again, in each company, you have a leader and maybe a couple of players. So obviously, there's concentration. The PSU banks, again, from 40 have just come down to 12 now. So there is consolidation everywhere. So the big are getting bigger. It's too big to fail. And that leads to another area, universal, as the survival of not just the fittest. It's the survival of the fitter among the fittest. So are you really in that super fit category? Are you the fitter among the fittest? Are you really in a niche where you have a unique value proposition? And it's not just your value, it's your values also. And as internal audit, as I say, always hurt mad. So be helpful, useful, and stay relevant with your trust to make a difference. And it's not just make a difference to the organization where you're working or auditing, but you're causing a difference to the entire stakeholders or the community which depends on the organization. So you'll have the regulators, you'll have the bankers, you'll have the competitors, you'll have the distributors, you'll have the suppliers, purchasers. An entire ecosystem is dependent on us for giving the right assurance, giving the right confidence to basically trade. So we have changing aspirations. We are now a socially evolved and networked economy. When we were not having laptops, to an era when everything is now on your mobile, maybe to another era where you'll have everything on your watches. I think technology has moved fast. And are we aware of the latest developments in technology and using technology really to our advantage? Yes, obviously technology can be also misused, but are we using it rightly? We may have confidentiality, accessibility, availability, and integrity issues, the CIA, what we call of data. We are drowning in data. We have huge data, but very less wisdom. Again, data sanity or data purity is an issue. So are we making the right analytics from the right data? And how do we select the right data and separate out the entire humongous unwanted data? Again, you need different set skills. And the set skills which you needed earlier, the set skills you need now have completely changed. So basic skills will never go. The skills of positivity, the skills of resilience, grit, tenacity, perseverance, determination, dedication, commitment. But are you a problem solver? Can you see the big picture? Can you use technology effectively? Can you get the entire machinery moving? Can you inspire and motivate your people? Can you walk the talk? Can you stay grounded? Can you be at 30,000 feet and minus 10,000 feet at the same time? So different eras, different changes. Change is the only constant. So are we really equipped and are we continuously learning? And that's what continuing professional education is all about. So are we equipped with the right skills to counter the changes? Because disruption is commonplace. And are we doing things enough to stop being disruptive? And are we preventing ourselves from being disrupted by actually taking the bulls by its horns and leading from the front? Aggression is the best form of defense. So we can't be reactive. We can't be manual. Our controls have to be designed and implemented so that they operate effectively and efficiently at all times. It's all about prioritization. It's all about urgency versus importance. We need to know what is important. We need to know what is urgent. We can't let things to be urgent and important, and we should not end up firefighting. In fact, we should not let the fire start itself in the first instance. So as auditors, we need to basically get our things right. What are we doing? Why are we doing? Do we have a clear clarity? Do we have focus? And if we have that vision and the mission is sorted out, then you can do things very easily in a structured manner. The problem with risks is everybody knows risk. But everybody doesn't know to manage it in a simple, structured manner. We don't know how to kiss risks. We don't know how to keep it simple and straight. So there was an ad of a drink called Mountain Dew. डर से मत डरो, डर के आगे बढ़ो, क्योंकि डर के आगे ही जीत है. And there was another ad of Hero Honda. Fill it, shut it, and forget it. So, going by the first ad, are we taking steps boldly? The greatest skill which is needed for an internal auditor is courage. Do we have the strength to to call a spade a spade. If something is going wrong, then can we be a whistleblower? Can we stop all wrongs which are happening? Insider trading, money laundering, mis-selling, common risks in financial services, conflicts of interest, ethical violations, absence of culture. Do we have the courage to stop non-compliances, to stop a transaction from happening because it's not compliant ab initio? And if we do that, we are transparent, we stand with integrity, that's what will pay for us in the long run. It will enhance our reputation and credibility. Why are we seeing various issues on our profession? Why are people taking pot shots at us? It's because somewhere down the lines, maybe a few or maybe a minuscule would have somewhere done some things wrong or not done some things right in the true spirit in which it should have been done. So ethics and integrity are absolutely non-negotiable. That's what I think we should swear by and wear it by our sleeve, and it should be firmly embedded in our DNA. And we should have the courage to stand by our principles, our convictions, our values. And we can only add value if we have values. Values lead to value. And that's what best practice is all about. And then, if you have a system, follow the system. The system will work on an autopilot mode. Is it happening? Are people sensitized, aware, or trained on how they should do things right the first time? And what would be the adverse consequences if the thing is not done right first time? So at ground zero, that's where the operations happen. I think we should treat this as we are fighting the enemy on the battlefield. It's ground zero. 1 second, one mistake, and you're down. Can't afford to let our guard down at any point of time. So is there a risk culture spread throughout the organization? Is the understanding of risk the same at a person at ground zero and a person who's at the chief risk officer level? So that's where communication plays a major part. That's where your tone at the top and walking the talk plays a major part. And that's where the SOPs and the rigor in which the SOPs should be followed. Obviously, nothing can be rigid. There has to be flexibility given the disruptive times we lead to. But there has to be some order, even in the chaos. Having no order or process will lead to more chaos in a chaotic situation. So have we developed the right mindset, the right culture? Are these things coming under internal audit, by the way? And what is the respect which is given to audit? Is he a part of a strategic process setting? Is he a part of the governance process? Where is he in the hierarchy? Ideally, an auditor should be a permanent invitee to all meetings of the board. Is that happening? So that's what we need to see. And then we have, again, a situation of a paradox where you have a huge demand for skilled resources And at the same time, you have a huge unemployment happening in the country. At various organizations, especially in the profession, wherever I have traveled, people are short of staff and skilled staff. And you have an N number of people out there in the country who are unemployed or who are wanting work. But it's a classic case of skill mismatch. So let's introspect and see whether there is a skill mismatch in basically even our audit function. Because we are not doing the same things which we were doing 20 years ago. The world has moved on fast. And not just fast, it has moved at a supersonic fast speed. Have we kept pace with that? Have we learned the new skills? Have we seen what level do we stand at the maturity model? And we know what steps we should take so that we move up the maturity model. So when we are talking of best practices, we should be the change we should want to be in the world. We should want to see in the world. So we need to be the thought leader. We should be the one who would be setting up the trends. And others should be inspired and follow us. So where we are, where we want to go, what is the gap, and how would we bridge the gap? In terms of manpower or technology, and at what speed do we need to do this? And what should be the composition of a team? What should be the skill sets? What should be the diversity and inclusion we should do? Are we paying any lip service to the ESG which is going on? So are we inclusive in terms of, yes, it has to be. So do we have the right mix of not just the accountants, but also the MBAs, the IT guys, the HR guys, the admin guys, or you have horses for courses? We are living in a gig economy. So do we have a team which can stand up at this spur of a moment? So like they assemble a Ferrari car instantly. Could be called to do anything, anytime. Are you ready? Like you are in a war situation. An internal auditor ideally can't sit complacent. He has to be ready that anything can happen, anything can go wrong at any point of time. He should see whether, as the last line of defense, the risk department, the chief risk officer, whether there's a position of a chief risk officer. So he has to be on top of governance. Many banks don't even have that position of a chief risk officer. They don't have a position of a chief compliance officer, especially the cooperative banks in the bank. A risk-based internal audit, which RBI issued way back in 2002, many banks have still not implemented. Automation of NPAs, which RBI said should be done by March 31st, there's still manual interventions going on. So at times, even a compliance assurance may be a great game changer. So what exactly is the need? Where exactly you can add value? And that's what you can do with your values. So in this VUCA, Bani, a world which is in pain and death, how do you use your EarthMat techniques? Or as I said, your CCTV, being competent, credible, talented, and with your values, which you bring on the table. How are you using that effectively to make a difference, make an impact? to ensure things are being done right first time. So that's what I should bring on the table, and I should deeply introspect where they are lacking and just do it all to ensure that they are transparent, they are objective, they are competent and credible. So it's all about the ethics, the 4 principles of ethics. And of course, in our chartered accountants, we have a 5th principle of professional behavior. So doing things right first time. Risk will always be there. Whenever there is a risk, you need to de-risk. An internal auditor as a risk de-risker. An internal auditor who adds value in the uncertain landscape. Thank you. Any questions? I'll take up. I've just about 5 minutes. So
Thank you, Abhijit sir. Question and answer session will be at the end of the seminar.
Oh, fine. So I thought this was, yes. So do I have some time or any issues or any questions from your side, or I just sum it up?
Some question will be taken at the end, sir. And currently we have to go to second speaker.
Fine. Thank you.
Thank you, Abhijit sir, for a wonderful session on adding value in the emerging uncertain risk landscape. Now I would like to move ahead to second session on topic of integrated assurance by CAS Deepika. Ma'am. Ma'am is Associate Chartered Accountant and done diploma in Information System Audit, and Certified Credit Research Analyst, and done PGP Business Intelligence and cleared limited insolvency examination. Ma'am has rich experience in handling assignments involving audit analytics, exception reporting, application review, ERP recommendation, information technology, general controls, internal financial controls for banks, NBFCs, manufacturing companies. Ma'am held various positions like Special Invitee to the Digital Accounting and Assurance Committee on SIRC of ICI, Joint Secretary, Women's Committee of Institute of Internal Auditors, Madras Chapter, faculty with SIRC of ICI for Information Technology Training on Advanced Information Technology Training. Guest lecturer at various education institutes and colleges in topics of data analytics, blockchain technology, audit, automation. In work experience, ma'am is working with CNK and Associates LLP from October 2017 and handled audits in the area of analytics, system process controls, risk for large manufacturing, banking, and financial services companies. Successfully handle assignments in internal financial controls and ITGC for banks, discom, manufacturing companies, information technology companies, and clubs. Over to you, ma'am.
Yes, Parvinder Singh, sir. Thank you. Thank you very much for the introduction, and thank you for the opportunity to share my thoughts on integrated assurance today. I hope I'm loud and clear. So yes, without much delay, we'll go into the topic. So what is integrated assurance? So we are going to see what is the current assurance framework, why there are some challenges in the current assurance framework, and how integrated assurance can benefit the organization and the entire stakeholders at a large. So what is integrated assurance? It is the process of effective coordination and collaboration between management and internal as well as external assurance providers. So now, if you see the current challenges or current landscape, we have an internal auditor with a specific scope. We have a statutory auditor with a specific scope. Then we have a tax auditor. Then we had GST audits. Then we had, let's say we have other external audits also, like ISO certification, lead audits. Then we have regulatory audits conducted by MCA, conducted by IRDA, RBI. So if you go to any organization, it is such that we have every time the client is have to prepare some samples, some audit evidences for different audit purposes. And sometimes clients are also fed up, like it's yet another audit. Another audit team has come. I'm sure all of us have faced such scenarios where the organization as such is being forced with so many different assurance service providers, and it is also need of the hour where different assurances are required in different areas. Main reason for that being the requirement of each audit or each audit report is discrete, and to have a combined view of different areas of scope across different audit verticals or different auditors is a challenge which the entire fraternity and entire stakeholders are facing. So integrated assurance is addressing this pain point, not just for the auditee or the auditor, it is for the entire stakeholders at large. Now, let's say we take a scenario where we are talking about sustainability. Okay, we are talking about areas called CSR, corporate social responsibility. We are talking about ESG. So all this are actually making a better assurance to the stakeholders, wherein we know the organization is going with purpose, not just exploiting resources, not just exploiting consumer data. Let's say GDPR compliance. So there are so many regulatory compliances or optional or adopted compliances which the organization puts forth and prepares assurances to the stakeholders to ensure that it is having a focus towards where it is going. The overall objective of the business and the economy and the society and the financial inclusion, all that, how it is addressed. But now if we take whether all the companies are implementing it, whether the regulations required for compliance for one entity is required for another entity or not. So there is so much of conflicting views wherein applicability of an audit itself is a question. So if we have opportunities to discuss scope and all with the client, the first thing is CARO applicable for me? Is tax audit applicable for me? Is this applicable? Is that applicable? So here we are talking about an integrated framework where all necessary, not just regulatorily required, but what is required for my business operations, all my business drivers are considered, and assurance framework is built across all the business drivers and all the stakeholders requirements. So here I am going to collaborate with the management, that is the board of directors, the audit committees, the other committees of the board, then the internal auditors or the external auditors, then also ensure that all the risks at various levels of business are mitigated and how they are addressed and how the strategic goals are achieved. So if we see the current landscape or the current challenges, assurance inefficiency and overspend. So the inefficiency comes mainly because of the limited scope. Like, let's say you want to cover, you are the internal auditor of an organization and the audit calendar is spread over 3 years. Okay. And let's say I have a less risk area, let's say fixed asset physical verification. Okay. Which is done only once in 3 years. Okay. Once in 3 years. That's my audit calendar. So it is possible that with low materiality, some components of the fixed assets are actually not having, are removed from the particular asset, which is not active or it is idle. And the monitoring mechanism comes at the end of 3rd year where actually maximum parts of the components of that fixed asset is gone. And since the asset was idle, it is possible that the internal controls were not sufficiently working to monitor it, right? Now, as an internal auditor, will I take responsibility for that assurance? Or let's say next, as a statutory auditor, am I going to get a responsibility for the assurance? Or is the management going to take? So now since there is a conflicting scopes and accepted level of risks actually are creating inefficiencies. So now, in spite of spending all on different layers of assurance at different levels of places, still there is a inefficiency that has come. So it is, I have given a very simple example, but it can be applied on more critical areas also. So, and next main challenge is incomplete risk and opportunity universe. So all of the internal control systems are now surrounding around what is called as risk control matrix. So many organizations have actually forgotten risk register and they are just going with RCMs. So most of the RCMs or risk control matrices are surrounded with specific risks which are impacting finance, right? But for an organization to run, only financial risk or risks concerning finances are not sufficient. It may require risks which are going to impact my operations, my business, my customer behavior, my growth, my expansion. So are these considered in my risk universe? Is my risk register comprehensive to ensure all the risks are first captured? So this itself is becoming a very big question mark because most of the assurances are provided by external stakeholders and the internal stakeholders are only preparing things to pacify or to convince or to create documentation to satisfy an external stakeholder or an external assurance provider, right? So if in this manner, if we are working, there is a lot of risk that the organization is not identifying key critical financial control lapses, critical business disruptions, which is actually resulting in a lot of companies being in financial soup, being in IBC, being in other regulatory non-compliances and frauds and all that. So the main reason is this: audits are provided with limited scope and assurances are based on some specific parameters. The comprehensiveness of the risk universe is itself questioned. So there are more complex risks such as regulatory scrutiny and more rigorous compliance requirements, which are taken care only when there is an inspection, only when there is a regulatory audit. Silo-based responses on GRC. So we have governance, risk and compliance departments. Now here, if you see, even if I have a GRC division which is managing all my risks, still now GRC department is working in silo. IAD, internal audit department, is working in silo. The external audit team is working in silo. So now what happens when we go to the actual stakeholder, who is the operations team? Let's say finance company. So the main operations will be the loan origination team. Next we'll say collection team. So now 3 different stakeholders are going to go with same points to, let's say, collection team for audit. So this month GRC team is going, next month my internal audit team is going, and let's say next 6 months my assurance statutory audit team is going. With the same risk universe, with this similar key points, because all are talking about only critical risk, critical parameters. So what is happening is there is a lot of duplication of work at different verticals because they are not integrated and they are working in silos. So I'm sure all of us would have been in that shoes where we'll go as statutory auditors. There is an internal audit function already done. Still, in accepting the work of internal auditor, we may actually take some additional samples. We may have some additional areas which we are asking for documentations on the same areas, right? So even known duplication is one part. But apart from that, because of working in silos, there will be a lot of unknown areas which are duplicated also. And now all these people who are working in silos, how we are reporting. So the stakeholders involved. So the stakeholders for external assurance service providers are different. Stakeholders for internal internal assurance providers will be different. So there are different stakeholders who require different reporting. How are these reports going on? How much detail is going into these reports? All this actually is a very, very important key pain points in the current assurance landscape. So significant audit committee burden to govern and approve assurance plans without appropriate support or from subcommittees. Then we have a perceived lack of value from risk and assurance providers. So this also many of the times we would have faced where we are having what is the actual value we bring to the table as an internal auditor. Do we deserve a place in the table for a particular meeting? That itself is a question mark. Next, what is the value we are bringing to the business? Many times because the value we bring to the business, many of our audits are around the regulations, regulatory non-compliance and fraud risk, where actually the operational efficiencies are not adequately addressed in the internal audit activities. So when we go to the management, there is a perceived lack of value which they see, though we are actually working with specific parameters. So the current scenario is that we have too much of information, too much of people working on it, but we are not having sufficient insights. We in the sense the stakeholders, it can be the board, it can be the audit committee, it can be, let's say, the CEO. What is that CEO gaining from the audit report? Okay. Is he having assurance that all the processes that he has implemented, all the controls that he has implemented is working fine? Is it operating fine? Is there any scope of expansion? Let's say there is a change in business scenario, there is a change in stakeholder expectations. How my controls have modified to support this? So is there sufficient insight on the regulatory changes, on the customer preference changes, my operational changes from these audits? So this is the first big question mark. And the next big question mark is the risk serves multiple masters. So it serves actually chief operating executive. Then we have the CAEs, CEOs, CROs, CFOs, audit committees of the board. So we have so many stakeholders who are actually depending on the assurance which we are providing and the risks which we are evaluating in the process of audit. So now, are these actually correlating each stakeholder's need? So as a risk officer, the need for my risk assurance will be much higher than a, let's say, chief executive officer. So risk officer will be seeing on different aspects than compared to a chief executive or chief operating officer. So whether my report is going to give me the risks that are required for the executive officer also, and let's say chief audit executive also. So there I'm correlating each stakeholder's need and ensuring my risk universe covers all the parameters required, and I am not overlapping with different stakeholders. Okay. The stakeholders also should not overlap, and my risk assurance providers also should not overlap. Where it is something to say in a simple words, like why we say we need ERP. So enterprise resource plan. So we would have learned level 1 of computerization, level 2, level 3 generation, integrated ERP, integrated IERP we say. So why we say that? It is because only if there is one data source in an organization, only then the integrity of the data can be validated. Same way, if we have only one assurance provider or one single assurance framework, I'll not say assurance provider, it's actually the assurance framework. If we have only one assurance framework, then the quality of the assurance and the acceptance of the assurance is much higher. So it is not necessarily it should be one service provider. So let's say in an organization, we'll just compare it to the data. We may have, let's say, Tally for finance. Okay. And let's say we are having a procurement module. Okay. We are having a procurement module. Let's say it's a portal. We have a vendor portal. Okay. Portal, we are using it for, sorry for the handwriting. I'm just writing through the touchpad. Okay. We have having a portal for procurement and our supplier management. Then I am having a separate CRM solution. Okay, I'm having a separate CRM solution for sales and marketing and lead management. And let's say I have a stock warehouse management system also. So it is not necessary all these products are bought from the same vendor. It can be a different vendors. But what is important is the framework which I am adopting, that is the data interface which I am adopting, should be common so that there is seamless integration. DB I'm writing, so database should be common. So there is a seamless data flow. Like whatever I purchase, there is entries automatically posted to Tally. So only manual journal entries are manually entered, which will be for the provisions we create and the DRS is what we do and all that. So then whatever sales I'm making here should again flow to my Tally. And all the inventory is centrally managed, which is seamlessly managing my purchase portal as well as my sales module. So now if I'm having an integrated solution, one single solution provider, we have a lot of ERP vendors, okay, huge ERP vendors like SAP, Oracle and all that. So it may be costly, it may be possible, it may not be possible. It is good to have one vendor also. It can be multiple vendors also. But what we are looking at is the integrated framework where I'm having a common database. And even if I have multiple databases, how my databases interact with each other are so normalized and optimized to ensure that we are having any data from any report. Let's say on a particular day, I'm taking sales register from this and sales register from this. It should tally. If it is not, then the whole concept or the whole effect of actually investing time, effort, money on building all this is waste, right? The same thing is brought out in integrated assurance, where I have an internal audit function, I have a statutory audit function, but the framework with which as an organization I operate is going to be integrated framework which covers all the different risk parameters, including regulatory requirements. So it can be regulatory reporting requirements, regulatory compliance requirements, but it also includes my financial controls, non-financial controls, operational controls, my business risks, my customer preferences, my disruption, what type of technology I use, what type of business model I'm having. Is my business model requires re-engineering? Am I apt for the current day? Whether I need, if I stay at where I am, what is when I foresee disruption? So before I foresee any business disruption, or disruption is basically when your competitors supersede your business model and you are no longer having business. Like Nokia had button phones and technology which they did not adopt our competitors' technology, because of which actually they faced disruption, right? They were not able to sustain the market with their own model of phones. So similarly, there are so many industries which disrupt, who are not actually adopting to the newer technologies or newer business models, don't survive, right? So there should be indicators, monitoring mechanisms to ensure all these are looked upon on a very, very regular basis, so that all my stakeholders involved are aware who is taking care of what and how it is addressed and what is my recourse of this risk. So next we have to decide when, as an organization, I need integrated assurance. So we have some key questions, which is like a self-assessment questionnaire, which we need to assess to understand whether I am the person who is facing these challenges. So does my organization need to refocus on what really matters? So am I feeling already like I'm spending so much time on so many different things? What is the value I bring out of this? So now it is fancy for every organization to have a specific role audit coordinator. He'll be part of the finance team or IAD team. entire year, the work you'll be doing is only coordinating between different auditors. And if you happen to see much very large organizations, we see the entire internal team. There's an internal team which does only licensing with different external assurance service providers. So there will be, let's say, 50 applications in an organization. Each application will have different audits at different places. And the internal team, internal risks team, okay, the entire work of risk team is only coordinating between different auditor scope, report, whether it is completed, not completed, whether it is presented to the board, not presented to the board. So now this type of organization needs to refocus. Am I focusing my teams on what really matters? Is my accountability taken care of? Are my assurance report, the next question is, are my assurance reports heavy on detail but light on those details? So what is the question which we are trying to address here is, it has so many data points and so many charts and figures, and there's like 40 slider report is coming. But light on what those details mean. So what is that detail bringing to my business? What is the actual risk that I am accepting, or what is the risk I am undergoing because of this? Whether really there is, whether really I am bleeding or it's something fake. So that also is a very, very important thing. So after going through so many slides of observations, if that is not actually impacting my business and I am going on my regular way and there is nothing coming up, then those detailed reports are required or not, we have to decide. So is it difficult to reconcile the views you receive from various information sources of assurance? So there is an internal auditor who says this is risk, you need to redo this. And there is another auditor who says, no, don't do this, go for different solution. Okay, so now there is conflicting views. So next question will be, do people in business experience assurance fatigue? Because we have multiple sources of multiple audits. So am I actually tired of facing auditors? Does the term assurance need a better definition along with better definitions of assurance responsibilities? What is covered, what is not covered? So any of this parameter, if excuse me, if any of this parameter I am facing, then it means I need integrated assurance. I need to re-engineer my auditing process, or I need to re-engineer my risk assurance process. So here, when we say re-engineer my internal assurance process, it means from top, from the committees of the board till the last leg of my business operations, what are the different audits that are happening? I'm going to consolidate it. I'm going to re-engineer the process, realign my teams to ensure I'm optimizing the reporting requirements. So that is the need for integrated assurance. So what is integrated assurance? So it is also commonly known as combined assurance. So I have management functions, I have external assurance providers and internal assurance providers. So all this where I am actually combining and providing one integrated report, which is actually oversight of my GRC, okay, is going to be my integrated assurance. So my assurance framework will be where I know my actual core business value. So the core business value is surrounded with external business environment, operational performance, and business strategy. So we can call this as my business model. That is, what is the business processes I'm having, knowledge of business. That is the first and the foremost parameter which I'm looking at. Then the external business environment. So this will include my customers, my suppliers, the products, my regulators, all of them come under here. And what is my business strategy? Here comes my USP. So the core business model, what is my revenue point? What is my KPIs, KRIs, all that come here in as a business strategy. So for each of this core business drivers, okay, or core business areas, I'll have different drivers. Okay, like for example, driver for sale will be something customer satisfaction. My driver for sale could be warranty replacements. My driver for sale could be customers who repurchase from me. So let's say for operational performance. So I may have different performance indicators or key business drivers, which I'm looking at on a regulatory perspective, on an internal operational perspective. So how I am defining that. So once I defined my key business drivers, then I know what are the risks I should look at. So once I define my business drivers and list down the risks which are affecting my business drivers, then I get all my principal risks which constitute my risk universe. Once I constitute my risk universe, I will keep testing the risks. Those will be my risk responses. But that I think Abhijit sir also rightly pointed out so many techniques. We have TARA, whether we accept the risk, transfer the risk, mitigate the risk, all that are my risk responses. And my risk responses in the audit fraternity, we call it the controls. So what are the controls I'm having in order to mitigate the risk or accept the risk? So those are my risk responses. So now the themes will be that only, like whether I'm accepting, transferring, implementing, residue risk, all that. My risk themes, I actually enhance the execution of the risk, and I have unified reporting and monitoring. So this is going to be a overall process in which integrated assurance is going to be framed. So after framing, we need to implement it, right? So this is the basis in which I'm going to actually define my risk universe. So that is first I'm identifying my risk drivers or business drivers, then identify risks which are affecting my business drivers. Then I'm going to identify the controls or the responses which I have created for my risk, and I'm going to test that on a continuous basis. Not essentially part of internal audit or external audit or lead auditor or ISO auditor, but I'm going to ensure that at various levels, wherever required or wherever possible, I'm going to have a strategy rolled out from the management, basis which the entire stakeholders are going to work and provide the assurance to ensure that we have unified reporting and monitoring. So some of the examples of business drivers are like, let's say for a consumer or industrial product, product safety and brand loyalty are some key business drivers, basis which my customers are going to perceive value for my product. Next business driver will be my market growth. How I am, what is my market share, what is my market growth, how my customers feel based on my products, what is the supply chain mechanism I'm having, how my assets are performing, okay, and how much I am digitized and using technology. So these are my key drivers that enhance the value through which I'm delivering. These are the drivers which are preserving my value. So now, basis this, I have to identify different risks. Okay, so customer experience, as I told, warranty, guarantee, my discounts, my customer coming back for my product, number of times is coming back. All those are my parameters for customer experience. My supply chain, what is my shelf life, how I'm going to manage my product expiry, how I'm managing my ensuring that products are getting delivered on time. All this will be my supply chain management. So like that, for every category of stakeholder value, we'll have different business drivers. So we have energy sources, safety, operational. So first is, whenever we are talking about risk, first is safety. That is, I have to be in an environment which is risk-free. So wherever is risk-prone, I will be looking at safety. So my first driver will be safety in any part. So even regulatory compliance, first part is safety, compliance. After that only next, right? So those are the things that we'll be looking at. So these are some examples of business drivers. So now my risk themes through which my business drivers are getting implemented. So as I told you, my first theme will be looking at safety. Next will be looking at the integrity of the operations. Then the performance. So this will be called as throughput. Whatever we are talking as throughput, return on investment, all that will be my asset performance. Integrity will be the values I bring into the operations. That is my ethical values, my brand values, my customer satisfaction. Then the integrity of the product, safety of the product, all that will be my operational integrity. Financial resilience will be my working capital requirements, how much risk I'm taking, how much is my own funds, how much is my borrowed funds, what is the leverage I'm having on my working capital, what is the interest outflow, all that will show my financial resilience. And what is the growth of business? As I told you, looking for disruption and having disruption as a indicator or a major risk indicator is a very, very important part, where actually that's the area. If I'm missing to notice, it's like my company's life cycle, my business life cycle comes to an end, right? So gone are the days where businesses were running for 100 years, 200 years, fourth generation, fifth generation. We still have some companies surviving fifth generation, sixth generation, only because they have survived, grown their business, and have adopted newer technologies. All the companies who failed to adopt and stay relevant to the current day have actually disrupted and are died. So it is very, very important. I look at this also as a key parameter. So my risk assurance program, okay, which is organization wide, should actually include all of this, should bring my, so first I take my business value, take my business driver. For each business driver, I go for my risk theme. Basis all my risk theme, I build my risk assurance program. So based on this risk assurance program, I will keep testing it and I'll be updating it. So this is like a cycle. Okay, those are my risk theme. So how am I going to implement the risk theme? I'm going to implement the risk theme through first line of defense, that will be my management. Then I have my second line of defense, which is my internal stakeholders. And the third line of defense, which is going to be audit. Okay, so in integrated assurance, we are looking at aligning to IAS global standards of 3 lines of defense. So where I'm implementing my risk assurance team or integrated risk assurance team through my top-down approach, basically from my management, how it is implemented. So my first line of defense will be my own management, where I am designing and creating, okay, what should be my business process, what should be my control measures, okay. So that's basically from the tone at the top, okay. These are coming from the tone at the top. So next is my second line of defense, which is going to be various functions that are overseeing different categories of risks. Okay, so this will be my audit committee, this will be my CFO, CXO, all of them who are actually responsible for implementing whatever the first line of defense has told. And the third line of defense will be the independent assurance providers, which include my internal auditors, external auditors. These come at the third place. Okay, these are the people who come as a third line of defense. So first line of defense is the business process and how my business process is designed. So this will be my, if we go by the COSO framework, okay, this will first line of design, first line of define will be the design of my control environment. Okay, so we call it design of my control environment. So next is my implementation efficiency or operational implementation. Okay, so next will be implementation of my design. Third will be testing of my design. So this will be my implementation, and next will be my testing. Okay, so this is how I'm going to implement my integrated assurance framework. So we have the fourth line of defense, which is the highest level of oversight, which is the regulator. So this is not from IEA. This is just a extension. This is just an extension of the 3 lines of defense, where apart from my internal stakeholders, I have external regulatory reporting requirements, which are also key parameter for designing the integrated framework, what I'm doing from my top-down approach. So first line of defense, I am doing the design. That is the policy making, business governance, what is the processes, what type of key controls should be there, what is the level of integrity I should have on my processes. All that will be my first line of defense. Then I have my second line of defense, which will be risk management and compliances. And third is my internal audit, and the fourth is the regulatory requirements. So what is the major benefits which I'm going to receive based on my integrated assurance? So one function, one body within the organization, and there's a single source of truth. There is no duplication of work. There is key focused risk exposures which are audited, reviewed, and first is we are designing it, implementing it, testing it, and monitoring it without any duplication of work. And for each area, we are going to get only one report, and the cost efficiencies which are involved, the time efficiencies which are involved are also some key important benefits which we get from the integrated assurance. So next important thing is common view of all the issues, risks, and controls across the organization, and ease of collection and reporting of assurance information across organization, and comprehensive and prioritized tracking of remedial action. Okay, so when we have single framework for assurance, we know exactly which is the top unified prioritization and categorization, not unlike where every report, in one report, one point is high risk, the same point may be coming in another report as low risk. So the risk prioritization also is a key important parameter which we are considering here. So the total assurance will include assurance in areas of risk management is what we saw already, business continuity management, where we are talking about business disruption, etc. Then my internal audit, quality assurance, this is my, let's say, the standards I comply with. Let's say COSO is the framework I have adopted, or ITIL is a framework I have adopted, or ISO standards I have adopted. So those are the quality assurance framework compliances. Portfolio management, then I have my external statutory audits, okay, external quality reviews, then I have IT audits, IS audits, investigations, and fraud reviews, then regulatory compliances, my project assurances, and probity assurances. So that is my ethical compliances and my integrity testing, all that. So all these are different components which are addressed used through my integrated assurance. So with integrated risk assurance, it is possible to give assurance with a panoramic view of all critical risks. So this is the most important thing. I'm having one single way report which is actually giving me aspects which are covering all my different business requirements, not just regulatory or any internal scope-based assurances. Then we can have actionable insights and advice to manage risks and build resilience. Okay, so which is going to be more critical. See, let's say if you are going to take VCM as a separate scope, let's say you are having 20 observations. In that, 2 observations require critical action. Okay, and you report this to the audit committee of the board, ACB. Okay, now if you are going to give an integrated assurance map or integrated assurance report, the time required to review all this is going to be optimized, and only this 2 you will itself bring in the report, right? But it's not that this 20 are not important. This 20 are important, but the re-engineering of the business and the design where the implementation can be speeded up, all this will be my continuous assurance process where I'm in the agile development mode, where the smaller things are getting addressed by itself. and only major things which require attention are getting reported, and to ensure my resilience on the key parameters are coming out. And since there is a continuous risk team updation, I am going to anticipate with enhanced risk anticipation. So like for example, we have reviewed so many business continuity plans and disaster recovery plans. But all the disaster recovery plans, if you see, will be anticipating power failure, flood, fire, earthquake, but not even one business continuity plan or a disaster recovery plan would have actually addressed pandemic as a risk, right? That's why the resilience to come back was higher. But if we had anticipated, let's say, pandemic as a risk and had some risk responses or controls built around it, my resilience could have been much bigger or much faster. Okay, my bounce back will be much sooner. The companies who did not anticipate any risks are the companies who died during the pandemic. But the companies which were actually anticipating risks and were bouncing back, the highly resilient business models actually boomed like anything, right? Not just the technology companies. Technology companies boomed. Yes, that was like de facto impact of pandemic. But there are so many other business models which came across after the pandemic, which were super hit. And those companies are getting so much of FDI listed and so many things are happening, right? So those are the things that have come up. So this is the integrated assurance landscape where I'm having internal controls and combined assurance, which includes review of all the stakeholders required. Okay, all my different stakeholders. These are my different stakeholders: board, statutory, and committees of the board. Then we have assurance committee, taxes, accounting, SOX, whatever is there. All that is covered through one common GRC implementation and one common assurance report. Okay, so with this, I think I'm closing my presentation. If any questions, we will take it during our Q&A session. Yes, I hope it was useful.
Thank you, ma'am. Thank you for a wonderful session. Now moving ahead to our third session topic, system controls, role of internal audit. I would like to introduce third session speaker, CA Premnath sir. Premnath sir has done CA, DSA, FAFD, Bachelor of Commerce from Shri Venkateshwar University, Tirupati, Andhra Pradesh. He's presently partner in C. Ramachandram and Company Chartered Accountants, Hyderabad. He has handled professional works like internal and external and forensic audits of large manufacturing infrastructure software PSU companies in banking, central statutory, branch statutory, government and revenue audits. He has also done income tax representation, including international taxation, transfer pricing, design and review of standard operating procedure as part of SAP implementation audits. He has carried out forensic assignments of MNC and large manufacturing companies and done study review audit of internal financial controls of PSU listed large manufacturing and private limited. He is also peer reviewer and ICI FRRB technical reviewer. He has regular speaker on e-filing, XML, XBRL, audit under CBS, GST, and done training program, seminar, conferences at ICI since year 2000. He is visiting faculty at Income Tax Department, Staff College, Hyderabad, GST Central and State Government, Hyderabad on GST Fraud Analytics, CAG Staff Training, Hyderabad, National Institute of Rural Development on tools and techniques of internal audit. Central Vigilance Officer on Digital Forensics, National Police Academy, Hyderabad, and IDBI, Andhra Bank, Indian Bank Staff Training Institute, review of annual return from lender perspective. Over to you, Premnath sir.
Thank you very much. At the outset, I thank Internal Audit Standards Board for giving me a privilege to be a part of this good session where eminent speakers like Abhijit sir and Deepika madam. Thank you very much, sir. And then I thank Bhishma Pitamaha Sri Nanda sir. He's always young in his thoughts. He energizes the total profession with his passion, not bothering about the age. Thank you very much for being making me a part of this. So my job has been made very easy by my eminent other speakers, Abhijit sir and Deepika madam. And Deepika madam has made my job more easier with integrated processes. An excellent way of presenting. She has covered 360-degree view of integrated approach. That's a fantastic presentation. And I feel it's more, one can draw a lot of professional opportunities from Deepika madam's presentation. It's sorry to say that we have been waiting for the government to allot some jobs to us. We are waiting for the government to allot some jobs like subsidies and all. But no, it's high time that we need to jump into the market and extract the possibilities. And that's what Deepika madam's presentation is all about. Every slide is a business opportunity. Every slide of madam's is a professional opportunity. We can make wonders out of each of the things. But only thing we need is we need to energize from the words of Sri Nanda sir, and we need to get motivated and jump into this and take out, not bothering more onto the income tax audits and GST audits. It's high time that we need to jump into, and a lot of value addition can be created into it. But if I start talking about these issues, the only one question that keeps bothering everyone is, if I start working onto all these value additions, will the business community pay me? Will the business community remunerate me? Is the first question that comes out from the audience. If I start expanding my area of operations into all these areas, will I be remunerated properly? The answer to that is today's my presentation. So I say, Dharmo Rakshati Rakshitaha, meaning if you comply with the dharma is the code. If you comply with the code will protect us. So what is the code for the chartered accountants? The code for chartered accountants is ICAI Code of Conduct, is the dharma for our profession. So if I comply with the ICAI Code of Conduct, I'm sure the rest will follow on its own. The rest is only incidental. Money is only an incidental, and that's not my objective. And where do we say this? I'll show you the very first line of ICAI Code of Conduct talks about public interest. Let me go into the very details of it. Having said that, I am saying that Dharmo Rakshati Rakshitaha, comply with the code, the dharma, comply with the ICAI code. And yes, I thank the Kurukshetra branch making me a part of this. So let's start with the Kurukshetra. The very first sloka of Bhagavad Gita, it starts about Dharma Kshetre Kurukshetre Samaveta Yuyutsava Mamaka Pandavas Sheva Kim Kurvata Sanjaya. Meaning, the literal meaning of this is the Dhritarashtra, the blindfolded, let me say the stakeholder. The blindfolded stakeholder is asking the Sanjaya, the knowledgeable Sanjaya, like the professional, like a chartered accountant, is asking, the Dhritarashtra is asking Sanjaya what's happening on the floor of Kurukshetra. That's the literal meaning of the very first sloka of Bhagavad Gita. The other way of interpreting the theme, the other way of interpreting this very first sloka is Kuru. Kuru means, as you all know, carry out. Carry out dharma kshetre kshetre, meaning let us carry out our dharma, dharmo rakshati rakshitaha. Let us carry out Kuru, let us carry out the dharma at every kshetra. Kshetra is place, kshetra is activity, and that's what Madam Deepika was talking about. Integrate internal audit function, integrate corporate governance, integrate various issues, and that's where we say the starting point of Bhagavad Gita, the starting point of ICI Code of Conduct. Let me give me 1 minute, I jump into it. But I said, for what I should comply with integration, for what I should have, why should I comply with the dharma? Why should I comply with dharma? Why should I explore into the new areas of integrated approaches? Why should I explore into the new areas of information technology and all and all and all? For that, the beautiful sloka of Bhagavad Gita is Karmanyavadikaraste mapaleshu kadachana ma karma palade durgo mate sangostya karmani. I hope you all know this. Every Indian knows this. It is, you have a right to karma, but never to any fruits thereof. You should never be motivated by the result of your action, nor should there be any attachment in doing your prescribed activities. Meaning that let's keep doing dharma. Let's get attached to the standards. The dharma of chartered accountants is the 3 dharmas of chartered accountants is ethical dharma, ethical standards, technical dharma, technical standards, professional dharma, the professional standards. Ethical standards are the code of conduct, professional standards are the auditing standards, technical standards are the accounting standards, and so on and so on. And the Bhagavad Gita is a code for the human being. ICI code is the code for the chartered accountants. And what I've said, and this is possible, I said the very first part of Dharma Kshetre, Kurukshetre in Bhagavad Gita, the very first part of Code of Conduct, you can read it. The very first sentence talks about public interest. It never talks about a personal interest of a profession. Yes, today there are few chartered accountants who have crossed this code for their personal interest. A drop of poison has spoiled the pure as milk profession is spoiled because of the few professionals, a poisonous drop into the good profession. Okay, but it says here, we should act in the public interest, not exclusively to the individual notes. And this is where buyer beware. Probably without knowing I have entered into this profession. Without knowing this, I might have entered into the profession. But it is high time that the profession should respect the very first word of our code, the very first word of our Bhagavad Gita. And I'm saying I should apply this, contain the requirements and application material. The application material, what I'm talking here, is the standards of ethical, standards of technical, standards of professional. Let me move into details. But all this is possible. All this is possible only and only if I have 5 principles called integrity, objectivity, professional concept, competence, confidentiality, and professional behavior. And that's what Nanda sir and that's what Abhijit sir and Deepika madam was referring to. So one initiates the other. Integrity, objectivity, professional competence initiates the other and all will move in an integrated manner. It's not that I only have unbiased. It's not that I only have an integrity, but everything moves. One moves the other, and without one, the other one fails. It's something like a vicious circle. And that's what the integrated approach also what we have heard. And then And with one more sloka of Bhagavad Gita, let me step into the core topic. And that is, it says kill. So the 50th chapter, 50 verse of chapter 2nd, Buddhi yukto jahati ha ubeshu kruta duskrute tasmad yogaya yujjasva yoga karmasu kaushalam. Meaning, the one who prudently practices the science of work. The science of work, what I say here, is the standard of ethical, the standard of technical, the standard of professionals. Rather, professional standards and ethical standards and the technical standards, I need to practice prudently without getting attached to good or bad. And this only makes us to enter into the new areas like IT audit, cyber security framework, cyber security, and so on and so on. That's what Abhijit sir and madam was talking about. And without attachment, can get rid of good or bad reactions in this life itself. Therefore, strive for yoga, which is art of working skillfully. And that's what Bhagavad Gita says, Kaushalam. Who is skillful? None other than a chartered accountant. Skillful in ethical standards, skillful in technical standards, skillful in professional standards. All the skill is for the purpose of not attaching to the good or bad. And hence, we'll move into system controls and role of internal audit. So before we enter into, let's see how company is interacting with, how company has various interactions. And at all these interactions, what risks we face, and all these interactions, what controls we need to put it. I've just tried to put it into one slide, and making this as a base, let's move into the next slide. So what I'm trying to say, one or two, I'll just explain it. I'll share the presentation later on. So what I'm trying to say here is the interaction between the owner, manager, and the company. What can go wrong is insider trading and related party transactions can make the real shareholders or the stakeholders getting affected. In the same way, the company and the shareholders, the interaction between the company and shareholders, the risk is accounts misstatement and securities fraud. The risk can be. In the same way, the interaction between the company and competitors, intellectual property theft and the employee bribery. Company and government is tax evasions. Employees and company relation is expense peddling, embezzlement, and so on and so on and so on. So at all these various interactions, what kind of controls? So the relation between the owner, KMP, the key managerial person, to the company is insider trader, RTP related party transaction, financial frauds, and security frauds. Okay. What are the controls? The controls are corporate governance, ERP controls, validations in ERP, configurations in ERP, very well protected disclosures in the financial statements, internal audit, reconciliations, ERP controls like WBS, work breakdown structure, inventory management, finance module, HR module, maintenance module. That's what Deepika madam was talking about. You integrate Tally with the CRM, you integrate Tally with the warehouse module, and so on, and fixed assets and so on. These are all the controls which can eliminate or reduce the risk in these relations. And in the same way, company to competitors, intellectual property theft, employee bribery. Then there you have a physical access controls, ERP controls, employee background verifications. And company to government is taxes, and the controls are ERP system configurations, tax audits, internal audits, periodical reconciliations, and so on. What I'm trying to say is a company has so many interactions, and in all these interactions, there are risks, and all these risks can be mitigated with controls. And these controls, there's a fantastic opportunity for the chartered accountants to jump into it and make it. Let's move away from the GST and the regular stream of GST and the tax compliance works. These are the areas where we need to establish, and we need to establish, we demonstrate the value addition, and the result is the money what we are thinking about, and that's only an incidental. We need to invest. We need to get motivated to invest our skill, kaushalam, as said in Bhagavad Gita. We need to invest our skill of professional, technical, and professional and ethical standards. Then the rest will automatically follow. So like this, vendor to company, you have shipment, short shipment, double billing, false invoices, employee bribery, kickbacks and all. All this can be controlled through a very well corporate governance, procurement to pay, ERP configurations, even Tally. I'm not talking about, don't think that ERP means only SAP or only Oracle. No. Tally has a very good potential today for medium-sized segment for very good ERP configurations. And thanks to the 24th March 2021 notification by the MCA for the audit trail, for which the Tally has responded very well, and now it is on par with, if not on par with the SAP. I can damn sure that it's good for the medium-sized business segment, where we can play a lot of role based on the earlier integrated approach presentations. So these are all the areas where we can make value additions. I'll take you into very detailed areas where we can do, be it Tally or be it SAP, wherever it is, we can contribute a lot beyond GST and income tax. Yeah. So we have been listening to Abhijit sir and then Madam and Nanda sir. We are all talking about ethical culture, and then this gives rise to an ethical, cultural, family background and corporate governance values, and transparent accountability gives rise to a pure objective policy, procedure, rules and methods. And these gets transacted into a decent transaction recording and so on and so on. And all this possible only with today's information technology, application system admin. I'll cover this. And all this happens in an environment where a legal system and all. I'll just take you to a vicious circle of all these things. But why controls? Why are we talking about all these controls? We are talking about controls because of preventive, detective, compliance, and then protection of assets. What controls is preventive, detective, corrective, compensative, manual or system-based controls. That's where Nandaji was talking about. We cannot blindly believe on the automated system controls. We need to strive into from the IS knowledge and give a value addition there. And of course, whose baby is all these controls? Is it the shareholder? Is it the board of director? Is it the chairman, managing director, or CFO, CEO, management, staff? Whose baby is it? I feel everyone will blame something goes wrong. It's the internal auditor or the auditor who is being blamed, and hence the role of internal auditor into this. So this is the cause and effect of excellent or efficient or effectiveness of internal audit. Ethical, cultural, family background with good corporate governance values and transparency and accountability will give rise to good policies, procedures, policies will give rise to good objectives. Objectives will get translated into policies. Policies get translated into procedures, and these procedures are in the form of rules and methods. And today, these rules and methods are getting occupied into the information technology area. And that is an area where we need to contribute today. And if we are not entering into these areas today, and because the information technology has no boundaries, Information technology has no boundaries, and hence whoever enters into this information technology can occupy any space. Example, today engineers are occupying the chartered accountants profession through ClearTax, through Zoho, through Tally. All these products are handled by an engineer, and they are indirectly encroaching. I don't say encroaching. They are indirectly occupying the space of chartered accountants. And I only say, listening from Madam, I only say that if we can occupy the space of information technology, we can drive away the competition and we are going to be the monopoly. And we are not entering into that areas because the boundaries for us is the GST and income tax. If we can break that GST and income tax practice, then I think we can enter into all the other areas, and that's where we can rule it. And what I'm saying here is, if ethical and cultural family background is the cause and effect for good objectives, and that objectives into policies, and that policies into procedures, and those procedures into information technology, and that's an area where we can give a value addition. This is one area. And that's what I said, the rules and methods are the information technologies and all. And on the other side, you have legal, political, cultural systems, ecosystems, global integration, bureaucratic system and all. And this is a huge PR management if you are able to do it. And none other than the chartered accountants are good in PR management. And this is a fantastic area of practice clubbed with this. So what I'm saying here is ethical. The ethical practice evaluation we can make here in audit and supervisory, the compositions and all, in setting good tone at the top, we can make value addition. We can make value addition in this audit officers and committees and all. We can make value additions at shareholders meetings and all, at directors, at divisions and operation levels and all. This is what is getting translated, because a very good cultural, ethical and family background will have a decent compositions and working in it. And this is where an internal auditor can focus onto it. And objectives and policies, I'll come back to it. But the challenges today are, if you could have gone into the recent newspapers, we would have seen that the Supreme Court is saying that the chairman, managing director or ED or the senior officials can't be held vicariously liable for the criminal acts of company. And that's what I said here. Remember, that is what I said here. Whose baby is this? The internal audit and all is whose baby? The management is whose baby? When Supreme Court is saying that the chairman, managing director, ED or the senior officials cannot be vicariously liable, then indirectly it is coming on to the internal auditor, because we are at all the levels giving assurances, if not absolute, depending upon the kind of engagement. But the kind of environment, what I'm talking about here, the kind of external environment, what we are talking about here, is 3 lakh crores of banking fraud in a 290 lakh crores of GDP. And that's a huge magnitude. And Modi ji is talking about 500 lakh crores of GDP in next 2-3 years of time. That's a fantastic opportunity. What we are looking at, the growth in GDP is the growth for the chartered accountants. And on one side, there is a growth in GDP. On the other side, you can see, if you can go on to the CBI website, you can see every day there are cases are filed on various frauds, and most of the frauds are from the white collar crimes into financial frauds. And all this is happening on one side, 3 lakh crores of banking fraud. On the other side, the borrowers are manipulating it. And 3 lakh crores is not a small thing. Out of 180 lakh crores of credit, bank credit, you have 3 to 4 lakh crores of frauds sitting in the borrower's account who are corporates. And that's where we have a role to play from the controls point of view. Now, coming back to the information systems controls and all. So you have two things here, information technology with respect to the design, implementation, information, data within the information system. And information systems are the technology, people, process involved in the information. So this is all about the systems management spectrum, where we can do a lot of value addition, where Madam is an expert in all these areas. We have data center infrastructure management, data recovery and backup, capacity planning, system administration, automation, configuration management, system management, then application lifecycle management. Wherever management is there, there is an audit. So wherever management, there is an audit. And there is wherever there is a management, there is a risk. Where there is a risk, there is a control. And where risk and controls, where there is a risk, there needs to be an auditor. And where there is an auditor, they can put on the controls. And that's our relation. So where there is a management, there is a risk. Where there is a risk, there is an auditor. So these are all the areas where we can talk about, we can explore into, and a lot of controls needs to be understood in these areas. And you have all these new technologies today: mobility, cloud, digital service, big data, social collaboration, blockchain. We are using all this. If not as a active user to make money, we are using it as a backend for booking Ola, Uber, and for booking Swiggy and Zomato. We are using all this. Rather, a Swiggy driver or a Ola driver is more tech savvy. Sorry to say this, they are more tech savvy and they're using these technologies, but unfortunately, we are not moving into these areas. And this is where we can make value addition as a preventive vigilance for controls. Then again, I say the information technology, we are talking about the information technology, and this is a huge landscape waiting for the chartered accountants to enter into. And this is getting occupied by the engineers, because wherever there is an information technology on one side of the coin, on the other side of the coin, it is a business. It's the business on one side of the coin. On the other side of the coin, it's the information technology. And we are on the other side of the coin, but the other side of coin of information technology is being run. The business is today run by the information technology. And we are on the other side as an end user, but the engineers are getting control of the business operations. And that's where I'm saying again and again, I repeat that let's break the barriers of GST and income tax audits and move into these areas of practice where we all can earn a good amount of reputation. And these are all the areas where there are 3 levels of operations for us. Organization leadership, this is what ethical practice we are saying in the managing the risks. And information risk management area, I said management. Wherever management, there is a risk. Where there is a risk, there is a chartered accountant. And technical risk management areas, and then like people, apps and data, infrastructure, key areas, and then IT operations, OT operations and whatnot. All these areas are waiting for us, and then we can go into these practices. Okay, for an immediate practice, what opportunities readily we have, let's have a look at. And this is where the Information Technology Act complies with the cyber security. This is readily waiting for the chartered accountants for a strict data protection act with section 43 of Information Technology Act clubbed with the rule 8 of rules of chartered account rules of the 43A of Information Technology, where it talks about any system which is having the personal information has to get, this is what section 43 says, any system has a personal information. Any system, like let it be my personal laptop, let it be a standalone system, where a personal information is there, and that system needs to be audited as per 27001 ISO 27001 system. That's what ISO 27001 standards. And this is a fantastic opportunity because we always say, what is Institute ICI giving me even after getting qualified as an ESA auditor or a DISA auditor? Let us understand that the ICI is not a welfare association like a transport welfare association or some welfare association. ICI is not a welfare association. ICI is a regulator, and they regulate the profession. It's not that they give opportunities in a platter and then bring it to our doors. No, it's not that. So we need to explore. And one such area still unexploited is this. Remember, how many of our clients have this 27001 ISO standard? Why can't we immediately start asking all our clients to comply with? Because this is an act, and if you don't comply with, this is what you have. So hence, and this has to be done on a yearly basis. And this is an act. You understand the 134(5) of Companies Act, where director's responsibility states that the director states that yes, we have complied with all the regulations of governing the business. All the regulations governing business, they say they are complying with. And this is an area where we can insist and take an opportunity. That's what I'm saying. Nanda sir is motivating us through all these sessions that we need to get motivated, break the barriers of GST and tax audits and bank audits, jump into the new areas and make good opportunities. And these are all other areas which I'll share it. Again, so I've just covered about the family areas, the ethical culture where we can make controls areas and all. Then legal PR works we have talked about. And then let's move on. We have talked about the information technologies and all. And now about the objectives, policies, procedures, rules, and methods for internal controls. So what is all about this internal controls? Internal controls is orderly and efficient conduct of business, safeguarding the assets, prevention and detection of fraud, accuracy and completeness, and timely preparation of reliable financial statements. So we need to look into the controls into these areas. So now, what are the systems internal controls are? One is, let me just talk about this. When the internal controls mitigate the risk of financial exposure, is called as internal financial controls. So rather I can say ICOFAR, or rather we can go more for the internal auditors. It goes beyond the financial controls. For internal auditors and for the management, it travels beyond the financial controls and it enters into the areas of processes. Processes means risk control matrix. Readily, we would have signed an IFC certificate for the banks from the financial controls point of view. So since our memory is very fresh with the bank audits, let me take you to the IFC related to the bank as an example of risk control matrix, and then we'll come back to this slide. Yeah. So how do we make the system controls or system control testing or system control analysis and all? Yeah. So first we need to understand the process. This is where again we have an opportunity to enter into and just Okay. The system is getting stuck. Okay. Now what I'm trying to explain here is through a process, we can assess the management in processes, and in each process, what is the risk? Like as I was mentioning about the, let me close this and then open this so that. Yeah. Okay. So there are 15 processes in one product of a bank. One product of bank, there are 15 processes. You can just see here all these 15 processes. So what can go wrong at all these processes? So risk identification, risk description, and risk control and its impact. And that's what we have done it. So what I'm talking about is if for one procedure, if for one product in a company has so much of depth, what we can do it, and you can understand for a good level of companies, so many processes are there like purchase, inventory, production, sales, repairs and maintenance, fixed assets, HR, and so on and so on. In all these areas, we can describe, we can identify the risks, and we can ask for the control descriptions, and we can find out, we can link all those for the mitigating the controls and exposure to the financial risks. Why the purpose of coming on to this description is to make you understand about this area of operation. Like, what is that? How do we start? I'm trying to make you explain that how do we start the system control analysis, or to identify is best way to look into the processes as I've demonstrated here. From process, find out the risks, list out each process, and for each process, what are the risks, and for each risk, what are the controls, and whether it is a system control, how much of information technology tools we can use for, like can we use for the fingerprint or swipe or barcoding or the tools on or various tools we can use it as a part of internal controls, risk mitigation. So I'm talking about risk control matrix, which is an opportunity for us. And we can find out whether each control is a preventive, detective, corrective, or a compensating. Now, in addition to this, again, we have various areas of risk mitigation in terms of procurement to pay, order to cash, WBS element, and so on from the SAP point of view. You may say, no, we don't have much of the SAP organizations. Most of our clients are, because 90% of the chartered accountants deal with small and medium firms. So 90% of the small and medium firms talk about the Tally only. So coming back to Tally, we can just see here, I'll just take you quickly to the various control lapses in Tally, where we can provide value addition in terms of system controls, features. You can see one of these companies where these features are disabled. You can see these features are disabled. And you could have seen, show all the features here. You can see most of these features are no. Now this is what I'm saying, the controls, if these configurations are not proper, controls are weak, lesser the controls, more the frauds and errors. And if we want to give a value addition, we need to enable as much configuration as possible, as much controls as possible. And wherever controls you're activating the controls, And whenever controls are activated, we need to look into the integration, coordination and controls. And once we activate the controls, then activate these configurations, then we get a lot of value addition to the management. Not only that, today every firm in India is facing huge shortage of manpower. If you're in your WhatsApp group of a chartered accountant, if you can look at the status, many of the chartered accountants keep posting the status as needed article students or paid assistants. 60 to 70% of the chartered accountant status says I need chartered accountants or I need article students today. Why? What is the value addition that an article student and the staff are creating? The value addition the articles or the staff is creating is the reconciliations. Why is that we are doing huge reconciliations? Reconciliation between the sales and purchases, inventory and financial statements, HR and financial, fixed assets and financial, financials and ETDS, financials and GST, GST and forms and so on. Why? Because it is not integrated. That's what Madam was talking about. So all those things can be very well integrated and the dependence on the staff will come down drastically. And that's what we can do it. And these are all the areas what we can do it. And can I look into the databases of these companies, Sorry, can I look into the databases and see how many gaps are there in these databases quickly? Yes, we can do it. How can we do that? You can do that through, let me just, you can go to this data and then get data from other sources like ODBC and then into Tally ODBC. And that's where you can see this is one company ABC what we are talking about, one company ABC what we are talking about. Now you can see how much of data in this. How much of data in this, you can just see how much of database in this. How much of data. And all this, for example, let me just take you to make you understand the controls and the way in which the Tally is used and where you can make a value addition. You can see how many gaps are there in this, to what extent we are using Tally. I only say that we are not using Tally, even 2% of Tally we are not using it. And you can just see here, the number of columns you have here is going into A, B, C, D, and you have 354 data points. You have 354 data points you have in this. And everyone knows to what extent we are using all this. You can just see here, created, altered, on. And this is what today we are talking about. The log 24th March 2021 log, what we are talking about is all about here. And if for one thing we are talking about so much, if for one area we are talking about so much, and for Tally, I'm not talking about SAP or I'm not talking about Oracle. You can think about what kind of value addition we can give. I again say at the cost of boring, let us break the barriers of GST, tax audit and bank audits and let's migrate into. If all these areas, you can just see the depth of Tally. Fantastic value addition can be given. And once we customize all these areas, the dependence on the articles, the dependence on the staff will get reduced drastically. And we alone can start controlling the client at a remote locations with integration and so many tools and so on and so on and so on. And all this, as I said, all this is only with Karmanyavadikarasya. Believe me that if you first look at the money and start doing it, you're demotivated. If you're looking at only a fees as an alternative, if you look at only fees and try to decide whether to do a job will never carry out any job. Let us do a job. The other person will get confidence, and that's where we can build billing and all. And why I have come to this is to tell you that there is fantastic opportunity for us waiting. And let's move on into these areas. So let's move on. I've just talked about Tally. I have not gone into the SAP. If anyone can understand the depth of SAP, you can equally bring those things into Tally and create value addition. And that's the reason why I'm moving into these areas now. Procurement to pay. This is what Madam was talking about. Integrate. Fixed assets and depreciation to be integrated with the finance. Sales and trade receivables to be integrated with finance. Inventory and trade payables to be integrated with finance. Procurement to pay to be integrated with finance. And that can be done in Tally. So this is my experience of 12,000 crores of government company. 12,000 crores of government company. The way in which the SAP is used is absolutely pathetic. Due to SAP configuration issues, GST compliance is presently carried out manually without a predefined set of processes, leading to undercharging of GST and non-availment of ITC, and sometimes it is overcharging and overclaiming of ITC even. And what is that you and I doing as a chartered accountants? You and I as a chartered accountants, as an internal audit or a GST audit or an external audit, spending huge time on reconciliations because the configuration is not proper. We are not attacking the system. If we once attack the system, then those things will come down. And this is my experience. And in one of the procurement to pay module, and these are various processes, and at all these processes, you have defects in system tax code, agreement of PO, and all these things are not properly configured, and manual coding is being done. Narrations and tax codes are not being done. Vendor aging reports are not maintained properly because they are not properly configured. When vendor management processing is not being properly configured, I may end up in certifying a wrong MSME interest liabilities. And today, I think we all know that everyone knows that the Schedule 3 is amended, wherein on the face of the balance sheet today, you have to talk about the MSME. And 30th April is a time where the MSMEs has to upload a return of their dues, which are more than 45 days. Say, suppose for one of my client, they have 100 MSMEs stated to me, they have only 100 MSMEs. But when 500 other suppliers who have uploaded their return stating that our dues are more than 45 for a particular client, for a particular company, since every MSME today are going to upload it, and at the central server, they can find out which company has how many MSMEs and they are more than 45 days. And they get that amount. And now, if I, for one of my client, I'm saying 1 crore is the MSME, and the central database is saying it is 25 crores, before I sign my balance sheet as 1 crore, the central government is already aware that there are 25 crores, meaning before I do an audit, the department today is aware what figures I'm going to certify, whether they are true or fair. And that's where the government is saying, when I am able to validate the company's data, what is the need for the chartered accountants to validate and give a wrong certificates today? And that's the reason why we need to break the barriers of tax audit, GST audit, and bank audit and enter into these configuration areas. And I've just put on, I'm just running out of time. Let me just quickly sum up in next 10 minutes of time. So I've just put on the present system, the defects in various processes, various stages I have set here. And at all these stages, what are the processes? and what are the accounting entries, what is the impact of this process is given here, and how can a new present system is explained, where are the things going wrong in this, and how can you change it? Now, these are places where I'm just talking about the GST configuration issues. These are not used properly. These codes are not properly used, and hence the system is not automated towards a better compliance. And believe me, these kind of configurations can very well be captured in Tally. I'm parallelly comparing with SAP potential and the Tally potential. I'm saying again and again that the Tally has a potential and we need to explore it and create values to it. And that's the reason why I've demonstrated the Tally there. And now I'm talking about the SAP. And where you can talk about the withholding tax code, we can talk about these codes are not being done here. And that is the reason why you have a system process errors and all. So in this way, I've just put on the various configuration issues here and all. It's a self-explanatory document. Instead of reading it, I'll just share it with you. And the issues, present, implication, and the proposed system, I've just given it here. Let me run through quickly into the other areas. So these are all about the procurement to pay. Yeah. Because of the ill configurations, you can see, because of the ill configurations, the ledger is showing this figure, 21 lakhs. The ledger is talking about the 21 lakhs figure. When a report is generated, the report is generating something else. And we, the auditors, you know very well, we, the auditors, even in our memories are very fresh with respect to the bank audit. We have dependent on the reports, not on the ledger figures. When you generate a figure on the ledger on the screen, you get one figure. And when a report is generated like this, a report is talking something else. These are all the configuration issues. And we act based on the report. We don't reconcile the reports with the financial data. That's what Nanda sir was talking about. Do not believe automation. Make reconciliations. Yeah. And you have various tabs for the purchaser. Same as in Tally also. And if these tabs are not activated and if these tabs are not filled in properly, more the data captured through proper data validation, better the preventive detective controls. Come back to the Excel. Again, come back to what I've stated in Tally. You can see the kind of data that you can enter. For ledgers alone, there are 354 data points, which is nothing is visible here. Nothing is visible here. And what I'm saying here is more the data you capture through a proper validation. Proper validation is like if I type an email ID without @ it doesn't agree. But in the recent bank audit we have seen, for account opening forms, they made email ID as a mandatory. In some villages, we have seen the accounts are opened through an internet cave because online they have permitted online opening, and when they have done it, for all these cases, an internet cave center fellow is giving his email IDs for opening a bank audit, for opening a bank account. You can understand the control weakness, the risk. That's what I said, the risk control matrix. At each process, we can make a value addition. Let me just say, for example, I'm trying to type a short text here. Is this to be picked up? Is this material to be picked up from a drop-down box, or will it automatically pop up? So like this, at every point, we have a value addition to be done. At every screen, at every tab, we have a value addition to done. And more the data is captured, more the preventive, detective, and controls. I said, let me again take you through the potential of Tally again. I just talked about only one thing. I'm repeating at the cost of boring you, but to give you a sense, I'm trying to repeatedly say only one thing, that there is much value addition, not only in SAPs, but also in Tally. We have just talked about only a ledger having 354 columns, and now look at how much of data columns you have in all these. And now you can understand what kind of work we can do it, what kind of value addition we can do it in all these. And that's the reason why I'm comparing the potential of SAP with potential of Tally. I'm not trying to sell Tally or I'm not trying to sell SAP, but I'm only trying to tell you that there is a potential in system controls, and these system controls are this. And all this procurement to pay is nothing but, remember, we are talking about objectives, policies, procedures, rules, methods, and all. Now, if my business objective is good, then that translates into policies, and those policies these are the procedures, and all those procedures are built into these tabs and those compliances, and these procedures alone will control the accounting, and these procedures will give MIS for decision making and for management. Coming again, create purchase orders. Data captured at purchase order stage will be useful for accounting entries as a preventive control. Meaning, if I make a proper entry at the purchase order stage, rest assured, at the end of the stage, at the accounting stage, we need not bother about. And because of not having these kind of controls, we are ending up in more of reconciliations and all. And this is what I'm saying here. Say, for example, spares orders are linked to CWIP, then automatically it will go into the capitalization. But if I am not linking the spares purchased to CWIP, then each and every purchase of a spare, I need to look into whether the spare is being used for the construction or whether the spare is used for repairs and maintenance. Lot of reconciliation again, lot of manpower cost again, lot of reconciliation, lot of manpower. And once we go into these details, and this is very well into Tally also again. And I say here, if the data is captured very well at the initial stage, then at the last stage, we have much more to do. Then in the same way, this is where I'm saying, if a service order, like I'm saying the spares order and for what I'm going to use will automatically decide, like say, for example, a spares order is made through a service number for building, for repairs and maintenance of a building state. And this is a service order configuration. Earlier we have seen purchase order configuration. Same can be done in Tally also, remember that. Now, tax codes. Now, because the tax codes are not made mandatory here, and at every invoice, we are forced into a detailed reconciliation where it's consuming huge articles and the staff cost. And once this is properly reconciled and where we are giving a very good value addition in these cases, then our role will become a good value addition, and then we can less depend on the staff and articles. And these are various tax codes defined in it, and so on. So this is what we were talking about, the procurement to pay and all. And I think I'm left with last 2-3 minutes of time. I'll just run through. So this is the risk control integrated business, is what Madam was also talking about. This is where we can do a very good value addition. Like say procurement to pay, delays in purchase requests will affect the maintenance, will affect the reorder levels, safety levels, shortages, and excess or short buyings, which will affect the delivery schedules and all. And once we activate this, that will become a preventive control. So we have, by now, if there is any ineffective controls, ineffective configuration, what should I do as an internal auditor? How do I find out ineffective configurations? Through a data analytics, you can make ineffective configurations. You can run some reports and see the impact of it. Like you can just see here the instances of delay in PR approvals. There is an objective, there is a policy, there is a procedure, there is a rule and method, but that rule and method is not properly adhered to, meaning a report is generated, but who is looking at this report? It's not the report generation. Wherever there are ineffective inefficiencies, it's not the report. It should be an exception report that is generated on a daily basis and flashed to the respective readers. That's where a value addition can be done by us. And these are some of the examples and all. In this way, I've just noted down, since I'm left with very less time, I'm just quickly running on to these things. And another way of analyzing and the professional skepticism with respect to the vendors. What we have done is we have taken the vendor file and then tried to link each supplier with whether he's a common director or a common shareholder or a non-GST supplier or a cash payment supplier or a non-RTP related party transaction, and whether they are one-time creditors, same, the suppliers with same address, same email, same mobile, shell companies. And then we have done an aging analysis for that. And we are surprised to see non-RTP, non-related party cases, 240 days outstanding is there. Whereas shell companies outstanding is there, meaning that these are all indicating a dummy purchases. And you can see a non-GST purchases are made faster, maybe accommodative bills. Cash payments are made, settlements are made in cash within 30 days. I hope this talks more of professional skepticism. This report talks about what kind of investigation we need to do. And all this is possible. And all this is possible with proper data analytics. And this talks about the corporate governance, the management ethical behavior. This talks about various things. And where are we missing? Corporate governance is missing. Market intelligence is missing. Vendor validation is missing. If controls are there in corporate governance, market intelligence, and vendor validation, then that's going to be a fantastic one. And that's where an auditor can make a value addition. And similarly, fixed assets and so on and so on. So I'll just go back. This is where we have started with. We have talked about the cause and effect. Culture gives rise to policies, gives rise to information technology, gives rise with a good environmental support, PR work, and into this. So what is the role of internal auditor? If it is fully implemented, systems are fully implemented. You can look at the information technology, general controls, IT audits, configuration management audits, then validations and so on. Verify exception reports, value addition into this. Look into check disaster recovery methods if it is fully implemented. Partially implemented, perform validations using MS Excel reports at what we have just now seen. Perform reconciliations, subledgers to TB, external data confirmations, whether alerts are properly made in case of deviations. Not implemented, manual vouching, verification, and so on and so on. This is where today we are spending a lot of time of article students is spent here. Lot of articles times is spent here. If you are feeling heat of non-availability of the article students, you need to migrate into this area, make the client to come into partially and into the fully, and that's where we can do a value addition. And what we can do as an internal auditor in improving organizations is cash management, treasury operations. If it is fully implemented, then we can go into these areas. Value additions, let us break the barriers of GST audit, income tax audit, and bank audit of some subsidy-based audits. Let's move on out of it, enter into these new areas. We can make economic vendor evaluations, improving contract term conditions, and so on and so on. Various long pending deposits after contracts terminated and negotiations and so on. We can make value additions into this. Hence, again, closing with Bhagavad Gita's sloka. of 69 of second chapter. Ya nisha sarva bhutanam tasyam jagarti samyami yasyam jagarti bhutanam bhutani sa nisha pashyato mune. Mune is skilled muni. You know, the Munimji we were talking about. So what we are talking about is what all the essence of this is, what all beings consider as day is a night of ignorance for them. For the wise and for what all creatures see as a night is a day for introspective sage for us. We are professionals. So we always introspect. We always comply with ethical, technical and professional standards. And we are always awakened. And that's what the prayer song we always start in every session. I hope we all know that the ICI motto song also talks about the same verse. Hence, today, I like a tribal man with bows and arrows or my audit tool. I am trying to fight with the powerful regulators like Kim and Russia with like this. And I hope you understand the outcome will be what. If I'm trying to work with this kind of tools and trying to face this kind of people, who will win is better known to you. And hence I say, wish you all a happy audit season. Thank you very much for your patient listening.
Thank you, Premnath sir, for wonderful session and wonderful examples at the end of the session, and sharing with us wonderful opportunity ISO 27001 IT audit, and also in case Tally Excel integration benefits. You explained very good in the very good way. Sorry. Now we have with us Gyan sir. I wish to welcome Gyan sir. He is Vice Chairman of Internal Audit Standard Board, CMA, CPE Committee of ICI, and member in approx 23 committees. Before going to Gyan sir, I ask all the participants to ask any questions if they have. Abhijit sir, Abhi hai.
Yeah, I'm there.
Sir, there is one question for you.
Yeah.
Can you please explain VUCA word once again?
VUCA stands for volatility, uncertainty, complexity, and ambiguity. So that's a word which was coined way back in 2002 to describe the situation which was there happening in the changing world. And that's a very common term which has been used. And this was caught on in India because HUL annual report in 1A, this term was used by the chairman to describe the current state. So that's a very common synonym of how the world operates. And this is basically way back. It's if you look at the real people who coined this was coined way back in 1987 by Warren Bennis and Bert Nanus. So can be Googled. But that's a common acronym to describe the volatility, uncertainty, complexity, and ambiguity.
Deepika ma'am, there is one question for you.
Yes, sir.
Is integrated assurance viable in absence of regulatory changes on same lines?
Yes, sir. Actually, it is possible because it's a top-down approach where from the management we have to identify the areas where there is all this overlap and ensure that we have one single framework that we are designing for our organization. So a lot of companies have adopted. There is use cases. It's not a new thing. Actually, it was in existence in the name of combined assurance, and it's widely adopted in Canada, America, and Africa. And in India also there are use cases. But since we have a lot of regulatory conflicts and sometimes regulator itself requires reassurances. So in India, the cases are few, but still it is possible. It's not unachievable.
Premnath sir, one question for you. What technical skills are required as an auditor for audits of ISO 27001 or related to cyber risk?
Visa is enough. Visa is enough. And then CERT, they are saying CERT in registration. CERT in registration can be done by a chartered accountant, subject to the eligibilities. Those eligibilities we can build up. That's not a big issue. So I strongly suggest that the chartered accountant should get certified, should get registered in CERT in. Yes, there are few challenges of empanelment conditions, but we can move out of it. That's very easy to comply with those conditions. Just form the private limiteds and get some small. Because I, as a chartered accountant, we have done good. Like say, we are doing concurrent audit assignments of banks, wherein we have already done the CBS verifications. We are already doing as a part of concurrent audit, we are reviewing the system controls. As a part of statutory audit, we are reviewing the system controls. We are certifying in LFAR that the systems are working proper. So these kind of eligibility, these kind of experiences, we can put it in the certain wherever we have a big clients. I think we can get an assignment and then we can build our profile and suit to the certain. I hope I need not take a session on how to build our profile. We know very well how to suit to the tender requirements. So accordingly, we can map to that and then get readily go into the certain. The fantastic opportunities, because as we are now going into the data privacy laws and all, that's a big opportunity opening up. And if you are not there, let me make it very clear, if you are not there into data privacy when it comes out, then this is going to be occupied by the lawyers and the engineers. We have already allowed clear tax. We have already allowed so many tax portals to occupy our space, because I'm sorry to say we are bounded by the GST, tax audit and bank audits. We have to break it and jump out and enter into the other areas. It's very serious time now. Yes, sir.
Thank you, sir. At last, their members are requesting to share presentations and video. I hope technical team will take care of this. Now over to you, Gyan sir, for concluding remarks.
Thank you, respected Secretary Kurukshetra Branch, Parvinder Singh ji, very distinguished Chairman of Internal Audit Standard Board in his absentia, C. Charanjot Singh Nanda sir, very learned speakers of today's program, C. Abhijit ji, C. Deepika ji, and C. Premnath ji, Chairman of Kurukshetra Branch, C. Gaurav Gupta ji, and of course, the persons behind the show, very respected officers of Internal Audit Standard Board, who are instrumental to organize such a wonderful program in the interest of the members at large. Friends, good evening to all of you. We all know that Internal Audit Standard Board is taking up a lot of assignments and a lot of webinars to upgrade the skills and knowledge of the members at large. Global Trends in Internal Audit, a look ahead, is a series which is going on as of now. Internal audit has been a very important tool for the management purpose in the industries and of course business houses. And my own perception is internal is more important than the external. If we have to grow with the values, then we need to have our structures internally very strong. The topics being covered today have been very much vital and important in the interest of the professionals and profession as well. I have gone through just the summary itself that the time has come that we chartered accountants have to adopt the measures and the professional arenas which we have given so far very less importance. Digital risk analysis and audits, risk management audits, internal control measures, all these things are just indicators of the audit tools which to be used to maximize the wealth of the business as well as to satisfy the needs of all the stakeholders of the community. Will not take much time. I am really thankful to the branch chairman and secretary and all the branch managing committee members for hosting this wonderful event. And of course, I am very much thankful to all the learned speakers who have spared their valued time to inculcate the value of the internal control system audit and of course the various aspects of internal audit among the members. I'm really once again thankful to the officers of the Internal Audit Standard Board who keep on doing their hard work in giving such wonderful events for the professionals and profession at large. I am really once again thankful to all the participants who have encouraged to the board for taking up such assignments from time to time. Friends, one thing at last I would like to share with you. We are coming up with some technical programs related to the digital upgradation and skill development with regard to especially how we can use maximum of the IT skills. We are coming up with the programs, and I request all the members to kindly join such programs from time to time to upgrade their skills. And good luck to all the participants for near future. Happy learning to all of you. Thank you very much.
Thank you, Gyan sir. There is one last question with Deepika ma'am. How to bring integrated approach in case of non-listed companies?
In non-listed companies only, it's more easier. The thing is, we have to now propose it to the management where we can take it up as a engagement where we can be the risk assurance providers to revamp the entire assurance framework which is already there. So to consolidate all the engagements, review SLAs, review all the scope, what is the objective of the respective engagements, and then we can do a small re-engineering activity of only these assurance verticals. So there may be some fire safety audit, there may be some different audits will be there in the organization. I'm sure like how every company will have minimum of 6 to 7 applications, minimum. I'm telling a small private company. Like that, they each will have minimum 4 or 5 consultants who are there for different purposes. From, let's say, some small payroll review to internal auditor to external auditor to some ISO certification. There will be surely 4 or 5 consultants minimum in a small company. So this can be like maybe a proof of concept. We can go in and consolidate this. And then the engagement could be where we are revamping the risk universe, revamping the assurance vertical. At least I think minimum we should be able to combine the IFC, internal audit, and statutory audit. These 3 will be like very easy to start with for a small company. And I think any further specific cases we can discuss offline also.
Thank you, ma'am.
Yes, anything else you want to add, Premnath sir? Or?
No, thank you, ma'am.
Yeah. Thank you. Thank you.
I think the answer.
Yes, thanks one and all. And now since the time permits us to close this program today, so good evening and good night to each and everyone. We shall be meeting soon with the next program. Thanks, one and all.
Thank you.
Thank you. Thank you, everyone. Good night.